Joining me today is Andrew Mickey, who is gaining notoriety as an up-and-coming small-cap expert. Andy, all morning we've been talking about commodities and whether we've reached the top of the bull market. What's your take on the situation?
Well, honestly, Sandy, most of the commodities have already seen their run and are headed down. But there's one sector that's still going to benefit, and that is oil service. Since in 2004, global production and exploration spending totaled $240 billion. In 2005, it got up to $200 billion, and in 2006, $250 billion were spent just expanding production. And that trend's going to continue into 2007 and beyond, and that's regardless of where oil prices are headed.
Okay, so where does the trend take an investor? Where should we be looking?
The best opportunity to capitalize on this trend is in the oil shipping service sector. Companies like Trico Marine, Secor Holdings, and Tidewater have been making money hand over fist by providing food, supplies, drill bits, and personnel to the offshore oil rigs.
And where are the rigs located? What areas?
Well, right now, oil rigs are located throughout the planet, including the Gulf of Mexico, Southeast Asia, West Africa, and the Middle East. But all these oil shipping service companies are going to be focusing their efforts on West Africa and in Southeast Asia because they are the ones with the higher day rates, and they're willing to pay top dollar to ensure that these vessels are supporting oil production equipment within.
Now, when you say the day rate, can you explain that to us?
Yes. Day rate is essentially what the shipping vessel company charges in order to provide the shipment of those personnel, food, supplies, and it's a contract between the shipping vessel company and the oil producer.
Okay, so you're making a recommendation that investors should be going for these kind of companies that are supplying the equipment to the rigs.
Yes, this is the perfect opportunity for the picks and shovels plays to capitalize on this expenditure trend.
It's a great idea. We haven't really heard much about that. Are there any other areas in the commodities market that you think an investor can make money from?
Yes. Even though nickel, copper, we've all seen them hit their highs, there's one area that's uranium. And that uranium set an all-time high 4 weeks ago at $48.25 per pound. And just last week it hit $52, and it's going to continue higher in the future.
That's great. Those are great numbers. So what specific recommendation might you have for investors?
The uranium company that's best poised to profit from the continued rise in uranium is Eurasia Energy. This company produced 1.1 million pounds of uranium last year, and by 2015 it's going to be producing more than 10 million pounds of uranium each year. And uranium prices aren't going to be hanging around $52 for much longer. When uranium hits $70, $80, $100 per pound, and this company is producing 10 million pounds each year, it's going to be worth 10, 15 times what it is today.
Any projections on when you think it's going to reach that level?
Well, in anticipation of the future profits, the Eurasia Energy, which currently trades for about $2 American on the TSX Venture Exchange and the London AIM Exchange, it could easily double by the end of the year, 3-4 times each year after. This is a great short-term play, and it can do even more over the long term.
That's great. That sounds like a lot of money for investors. Well, I want to thank you for making those recommendations and being with us today.
Okay, thanks for having me, Sandy.
You're welcome. Well, as you can see, there's always a way to make money and to profit from commodities. We've learned from Todd that there's never an oil bubble. Christoph told us about long-term puts on gold and even investing in rare coins. And Andy Mickey gave us some great information for investing in shipping vessels and uranium. To get the specifics, go to taipanfinancialnews.com. Until next week, here's to good profits from smart investing.